Good day, everyone. Thank you for joining us once again here at Seaford & Brew for our economic briefing. I am Jamie Sumner, the chief analyst, and for this week's briefing, we just want to review over some of the information that's come out over the past 2 weeks. We'll start off looking at the ISM Index, both manufacturing and non-manufacturing, and then we'll work through some inflation numbers and end up looking at that GDPNow that's put out by the Atlanta Fed. So when we look at the ISM Index, both manufacturing and non-manufacturing, overall we see a slight pullback from where we were back in November. So this is the December release. You can see overall the index for non-manufacturing went from 60.7 down to 57.6. So overall, we're still well above that 50 mark, which is indicative of an expanding economy. So that's the positive. The negative is the fact that we've been seeing some pull off over the past couple of months. When we look at the individual little segments inside that overall index, we can see the slowing down is not just contained to the overall, but also in its components. We have the business activity has slowed down, the employment also slowing, supply deliveries, the supplier deliveries slowing down, inventory slowing down, prices pulling off. We look at the backlog of orders coming in, as well as the imports down a little bit and the inventory down slightly. So overall, we saw a vast majority of the components pulling off. The ones that had positive changes, we saw the new orders increase here, and we saw the overall new export orders increase. So we see that supporting a better number, but the vast majority pulling off. When we look at the manufacturing, we see a similar trends. In fact, all but one component in here was a pull off from the overall number, and that was that new export orders. And then we saw the overall number reduced from 59.3 down to that 54.1. So we continue to see that pull off, but yet still remaining above that 50 mark. So if we were to see these numbers, these overall index levels come down below that 50, that would be a heightened area of caution that we would put out there. But overall, economy continuing to grow, but slightly slower than the last report. Jumping from the ISM index and looking at that producer price index, as we saw in the ISM, the prices were coming down. We see that happening in the PPI as we see the overall final demand pull off a little bit down to about that 2.5%. And that's consistent with the core number, less food and energy, this red dashed line coming down to around that 2.5 range. So we peaked out and we start to see these numbers pull off a little bit. And of course, this is the year over year change. Looking at the consumer price index, we can see similar occurrence where we peaked out mid to the third quarter in 2018. And then we started that downward trend looking at that year over year changing. And what I wanted to do in this chart, also add on here where we were in December at that 1.9, which is that red line. And this green line here indicates the average prior to 2008. And you can see how far below we continue to be. And we still haven't reached that number yet in the current history. Looking at the consumer price index, also we want to look at that expected inflation. So we look at the inflation expectations. So this is the 5-year forward, and we see kind of a similar trend where we peak out and then we dropped off here later in the year, and that's what we saw the occurrence in the 10-year Treasury peaking up over that 320 and then coming back down below 3%. In here it's at a 276. So we see that coming back down, and kind of built into the 10-year Treasury is this inflation expectation. So we saw the change in the overall expectation of inflation pick up, and that's when we saw the rates on that long end increase. But then we saw subsequently that decline in that expectation, pulling off some of that rate movement. So we'll see if this continues to maintain down here below that 2% range. Now let's look at that GDPNow from the Atlanta Fed. We can see where we are here for the fourth quarter expectations as of the 16th of January, coming in at 2.8%. So a pull off from where we were in the fourth quarter and in the third quarter. So when we look at this number, we can usually have updates, but because of the government shutdown, a lot of the numbers haven't been coming out. They've been delayed, so we haven't had any additional updates to this GDPNow. We will find out what the fourth quarter GDP is shortly. Expected to come out next week, however, could be delayed because of the government shutdown. So we're starting to see more and more numbers that are being impacted because we have the lack of information coming out due to the shutdown. Well, that's what we have for you today. We look forward to speaking to you in the future. Have a great day, everyone.